Welcome to the 2020 paper for the financial statements for Level 2 Accounting. And this one, what we're going to do is we're going to work through the additional information, these ones down here, and we're going to update our trial balance over here, and then we can use that information for the Achieve Merit Excellence questions a little bit later on. So what we're going to do is go through one of these at a time. First one is telephone, internet, 70%, distribution and printing cost 30%. So we're just going to cross this phone internet out and we're going to split that up. So 70%, $6,300. And that first bit is distribution, and the 9,000 times 30%, and that's your admin. Alright, so we don't want that 9,000 anymore. Finish the first one, so we can cross that one out. On to the second one. There's an invoice on hand for accountancy fees, $3,450, including GST. Accounting fees, we're not an accounting firm, we're a sports firm, so we've got an invoice, so we're going to split that up. And it's an invoice to us, means we're owing. So if we're owing, it's accounts, and is it accounts receivable or payable? Great, accounts payable. So we'll split that up, 3,450. Encourage you to do that right on your one. The 2 marks to split it up, and we're going to divide by 1.15. So that's 3,000 and 450. So the full amount, the accounts payable, we're going to add to that 7,600. $11,050. So that's the full amount, and that's credited. So the 3,000 and the 450 will have to be debited. So the accounting fees, we'll add 3,000 onto that. You can do that without a calculator. That's that part done, and the 450 is the GST. There's no GST on the debit side, so GST here, we're going to take away 450. I hope you're happy with that, and we can tick that one off. They're quite good because they're merit and excellence grades. You have to do a calculation. Printing expenses have been paid in advance. So what's an expense paid in advance? Alright, and what side are you going to put it on? Alright, we'll write it in. And for the full amount, notice that it's excluding GST. If it included GST, we'd have to take it off first. And what was it for? Good, so printing expenses. Because it's paid in advance, it belongs to next year, not this year. So we're going to take it off. Alright, third one done. The next part, wages are paid to all part-time workers. These workers are employed as required to assist with both printing and in the warehouse. So there's nothing there that tells us that we have to do anything. The only thing they're talking about is it's with printing uniforms. So those part-time workers are going to be a printing cost. The next part is important to us, so we'll cross it off. 2 part-time assistants are each owed 1 week's wages. Wages for part-time warehouse assistants are $700 per week. So we've got 2 workers, and are they owed for 1 week or 2? Just 1 week. We've got $1,400 that's owed there. It's worthwhile writing the figure over here as well. So if it's wages owing and there's no GST, so an expense owing without GST is called what? Okay, and what side are you going to put that on? Alright, let's write it in. So remember, accrued means owing without GST. And what was it for? Right, so we're going to have to add that on. So 1400 add to this side and to this side. Go and tick that one off. I write off additional 1150 bad debts. Because it's got including GST, we have to divide by 1.15. So 1,000, so we're going to add 1,000 to bad debts. Pretty easy, we'll just put a 1 there. And what do bad debts come out of? Good. So it comes out of accounts receivable. So you've got your 9150, and we're going to subtract the whole amount because what's happened is that these people owe us for that $1,000 bad debts, but they also owe us for the GST on that. So the whole lot off, and I like it when it comes to a nice easy number like this. The examiner does too, because it means that the allowance for doubtful debts adjustment will be easier. Alright, so we've got, not quite finished, because we've got that 1,000 and the 150. We've done the 1,000, we've got to do the 150 to GST. So GST over here, we can claim that back because we're not going to get that off our customers, so we're not going to owe it to the government. Alright, so we've debited 1,150. Sorry, we credited accounts receivable 1150. Debit bad debts, debit bad debts 1,000, and debit GST by 150. Cross that one off. Allowance for doubtful debts is 2.5%, and that's 2.5% of 8,000. So 200. So that's where we got the 8,000 from, times 2.5%. So this allowance for doubtful debts should be 200. At the moment it's 3. Just going to take it down to 2. And write doubtful debts on this side. And that's going to be minus 100. So we're going to debit allowance for doubtful debts, credit doubtful debts, 100 to each side. So it balances. Cross that one off. Printing income has been received in advance. It's including GST, so we have to get rid of the GST. Nice easy figure, 5,000. And you see the examiners like these easy figures. So what's it? Printing income received in advance. What's that called? What side? The reason we don't include the GST is because when we received it, that's when we'd probably pay the GST. So we've added it here. In advance, we have to do things on the same side. So we've added 5,000. So we're going to have to take off 5,000. Because 5,000 of that printing income belongs to next year, not this year. So that's why we're going to take it off. Finished. That one. Depreciation on warehouse fittings is 10% straight line. We can write WF here, but make sure that when you write it in full in the exam. So it's 10% of the warehouse fittings. So warehouse fittings, 130,000, and we can do that in our head. Times 10% is drop off a 0, and we're going to add that to 18,000. 31. All right, and 2 to go. Depreciation on printing equipment, 20% diminishing value. All right, so right, depreciation equipment. Now, diminishing value is the cost minus the accumulated depreciation times the rate. So the cost of the printing equipment is $235,000. Then we're going to minus the accumulated depreciation on that, $72,000. So 163, and then we multiply that by the rate. And that rate is 20%. Alright, so that's our depreciation. And we're going to add that to the 72. $104,600. Good, so that's that one, just the last one to go. Equipment with a cost of $8,000. I had a net realisable value of $4,500. So it's going to go down $3,500. So here's our inventory here. And we're going to take that down by $3,500. And we're going to add it to. Oops. Here's that figure. That's right, cost of goods sold. So cost of goods sold is going to go up to 3, 6, 7, 500. Alright, so that's all the adjustments. That's all the hard bit done. Obviously you're going to have to classify these as you go through. But when you're doing the ledgers, make sure that you use the opening balances as the ones that are printed here. And then the new balances are going to be these ones here that we've written in. So you're going to debit or credit those. And then remember your expenses and your income, you're going to close off to income summary. Well done, end of that one. Next video will take you through the next part of this assessment.